And good evening. This is the Elliott Wave update for the NASDAQ 100 for Monday, May 2nd, 2022. And what another crazy day in our markets, with the NASDAQ picking up a ton of volatility today. That's all I can say. The VIX itself is back above 30. And that's the VIX future. The VIX index is above 32, and it was higher. At actually, it's the VIX index itself goes to 32.34 on a downtick. It was down $1 today. So the VIX is now moving back up as the markets reopen, but the future closed at 30.90. Usually when you get over 30, it's not signaling massive rally time, but that seems to be what happened. And what I see kind of going on fits within an Elliott structure. And again, as much as I don't necessarily want to have to continue to subdivide, that's really what's happening. So again, I've extended the sub-minute wave 1 now. So it's sub-minute wave 1 of minute wave 3, of minor 3, of intermediate 3. So we are really bucking up against what, in my opinion, will be a crushing decline. Now, I thought we were well on our way to doing that without having any additional subdivisions. But if you actually traded the NASDAQ today, you may have been doing the same thing I did, was like, what are you guys thinking? And really what started it? Facebook or metaverse. Now, if you're a bull and you love metaverse, you probably think, who am I? I'm the crazy one. But again, I ask, we need to put this into the proper perspective. And where we're looking at right now, they're doing a little bit of a rebound. But the 10-year note pushed beyond 3% today. Now, again, this turns into what people think should happen, not actually what's going to be reality. So if you truly believe that inflation's under control, in fact, we've got no evidence whatsoever that that's even partially the case. If you believe interest rates are not going to go up much more than the 0.5 point that we may get on Wednesday, then, and if you believe that the rest of the global economies will readjust, we'll be back on that good leg again in just a moment, including the United States. I beg you to please send me evidence of that happening. But right now, I don't see it, nor can I find it anywhere. So what we continue to see is just human emotions reacting to the possibilities, to what somebody else is saying, to really, in my mind, crazy. Now, granted, it's the 2nd of May, so we're into the beginning of May. I think we're about a week early, but it could be a part of what happens. We get all that new 401k money. It's been moved in. Now it's been put over to the hedge funds, to the funds to put to work. That could have been part of what today was. But this thing, the NASDAQ went down at, and these are going to be Pacific time, so 2 o'clock Eastern, the NASDAQ hits the low at 12,709. Well, we'll call it 12,710. And then it's if somebody lit a fire and caused the NASDAQ to just launch. They lit the fuse, and the buyers poured back in and didn't stop until the bell. And by then, they had pushed it up beyond resistance, Fibonacci resistance at 13,029, which we'd gotten to this morning. They decided to go up and then exceed it. Now, granted, we always have to trade what's in front of us. But afterwards, I can take a step back and go, what are you all thinking? And I have to believe that it is got to be purely technical. We broke above the 50, you buy it. We broke above the 20, you buy it. What's next? It gets itself to the 200. And you know what? It could. It could. Now, you want to keep it technical? I'm not going to be basing it on, well, the Fed's going to do this. They have to now because look, the market's saying so. The market says nothing. The market should have absolutely no influence on what the Fed does or does not do. Even though, you know, the market can't demand that we want to have QE last forever. Not going to happen. A, because I don't feel like living in hyperinflation. And B, the reality is it's an impossible request. So again, all fits into this count that I am keeping. So I'm going to get right to it. On the larger daily chart, there are no changes. There are no changes. So I continue to count an intermediate third wave down. We now successfully did break below 12,800. And we got almost down to 12,700. Now, if they wanted to call this an extreme oversold condition, okay, that I can go with. But to push like they push on a hope, a dream, and a hope, women, a dream, no, they won't like it. All it really did is just provide opportunity after opportunity after opportunity. Number one, to HFT firms, high frequency trading firms, Citadel, Simplex, you name them. They're out there. Their algorithms were probably spitting out more trades and profitable stuff. So these are the firms that they got to walk away today with 10, 15, $20 million profits. And I'm not kidding you. On a day-to-day basis, Citadel, they're big enough. That's what they can rake in one day because they've got enough algorithms out there scouring, looking for trades, and they take them. Now, here's the other thing to remember. They're not turning bullish. They're just doing a complete trade. They're playing premium. So they're selling the premium and taking the opposite to close that trade. So if you're selling calls, you're going to buy the underlying. So, and I think that's what the majority of what is happening today. If you looked at Facebook, it was nothing more than premium being pumped into the calls, bringing every algorithm and their uncle in to take advantage of that. And you can. And if you know anything about reversals and conversions, as a market maker, it was my bread and butter. But even as an out of pit type trading, they're very, very possible to do. And on that basis, it's like you just do them. So in terms of the rally itself, it produced such glorious opportunities to trade. But again, I want to talk just a tad about mindset. If you had to take a minute to go like, why are they bullish? Who's bullish? Why is it? Does it mean we're going up? What about interest rate? What about? None of that can come into your focus or your purview while you are trading this thing. When you are trading, your mindset is to trade what's in front of you. You're not bullish, you're not bearish. You actually love the fact what the NASDAQ did today. They had gigantic flips, both directions, seconds apart. And then just they run it to a new high, slam it to a new low, run it to, back up to a high. It was a trader's dream today. And if you just could keep your wits, keep your focus, keep your mindset, and manage your risk, it was an extremely profitable day. And I'll be honest with you, not every trade I did was a winner, but I just keep trading. I just keep trading. I might have got out of one trade, and the very next trade I said, oh no, I'm going to put on the same trade, because maybe I was early, maybe whatever the situation was. And then I made what I lost plus. That's how it moved today. That's important to get yourself wrapped around, so that when it's happening, you're able to trade. Don't think about your P&L, manage your trade, manage your risk. So you have to have an idea about why you're getting long. Did it break a moving average? Did it break above resistance? Did we finish a 5-wave decline? And now we're going to bounce. And the intensity of the bounce should not catch you off guard. Go with it. Then step back, take a look at the market, but always be in a position to trade what's going on. We cannot take the moment to go, well, why is so-and-so now bullish? Why are they now bullish on Facebook? Why has Google suddenly turned around and now it's up $50? Why is Microsoft up $7? What are they really heading for? That's all noise. Have the conversation with yourself when the market's closed. Then go look to see what possibly created the situation for Microsoft to go up $7, for Amazon to make a turn and go up and down massively, for Apple to be down, $4 or $5 to being up on the day. What was it? What creates this type of situation? You can look at it afterwards and then maybe make some sense of it. But in the meantime, you still did well because you trade what's in front of you and you get along. Okay, let me drop this down. Enough pontificating for today. But I have to tell you, I think that when we can wrap ourselves around this stuff, it turns into a beautiful money-making day. And that's really the bottom line. That's the whole reason that I want to be here and do it, because it allows us, or the trader, to really trade profitably. And I know that there's a lot of people out there who have not actually reached that stage yet. And I would just encourage people to take a look at your trade plan, at your rules, at your strategy that you're trying to use. If you don't have one, you need to decide. You need to put this together. Otherwise, you will become a victim of the noise. And be able to make these trades based on your strategy, not somebody else's thoughts. Because again, if you're not willing to go like, why are they putting this trade on? What's the goal of the trade? Where are they willing to get out of the trade? Which are all things that we should do as day traders. Know what's going on. Know what you're trying to do, and know when you're going to stop and get out, because it's no longer valid to what your original plan was. So here we sit. Back on the hourly chart, I have, like I said, sub-minute wave 1 in place. We did 5 down. I actually thought that was going to be it. And then when we went up, we hit that 382 number, and I thought, oh my God, there it is. There's the small wave 2. And sure enough, it came all the way back down and went to a new low. And then I thought, so this was like, whoa, what are you guys doing? I traded it, but after when it was done, you take a step back and you go like, holy cow, you just blew through everything. What's going on? And I'll tell you what I did. Come on, please. I've been told that there's probably a glitch in the program, and I'm like gonna try to get this done so that I can open it up. Oh boy, there we go. Okay, so this is what we're talking about. So what I want to show is I'm going to go over and put this on the line chart. Remember, line chart's closing basis. So because originally I had put the one here. Now this had really gone up to there, gone up to touch that 382 level, but on a closing basis, it didn't. So now it clarifies what really is going on. So I'm counting 5 down. 1, 2, boop, nope. There's the 3. That was the 4. And then the new low is the 5. I use that line chart to give me some clarification, which I don't necessarily see in the candlestick. The candle chart shows me the extremes. You can see that's not the body of the candle. The body of the candle is almost a doji. So we had a candle on the bottom, we had a candle on the top. So on the closing basis, it gets here. And then I get that. So we get 3, 4, 5. Now we launch. And guess what? Even on the other chart, look at the body of that candle. Wow, makes a big difference, doesn't it? Right? Tails don't show. The body of the candle is what we really need to pay attention to. So it was on that second race higher that gave us the body and put more into place on what we're likely going to be confronting tomorrow. Now, if we're in a wave 2, A, don't know yet, but let's say if that's A, B might bring us down 100 down to 12,907. That's where we have 236. But first up is going to be the 50, which is sitting right there. Come on, tell me where that 50 is. At 13,026. We're at 45. So supports at 26. Then we have the 4 at, come on, 13,998. Now, is that going to be enough to put in a B wave? No. B wave probably like is going to have to come back down to here. And we still got a C wave up. So if we're doing a wave 2, A, B, C. What can we expect from the C wave? Well, I would expect that we're probably going to be the same in the same line as wave A. And if this is all a wave A, which I somehow at this stage don't think so. I think at this stage we swing up and we make another high, and then we do 5 up. So wave 2 will be a zigzag. Wave 2 being a zigzag brings all this back into play. Now we're looking, right? We're above that 50. We're above the 8. We're above the 20. We're above the 4. What's next? The 200. And if there's a lot of buy interest, you're going to have a lot of algorithms that will program in. They can buy it up to 13,365 or whatever, wherever their system is showing them that 200-day moving average is sitting at. These are the possibilities. In its way are going to be some fibs. Our next fib resistance level on a retracement comes in at 13,128. Then we get 618 at 13,220. Then we get this 0.70 and a half at 13,300, I'm going to call it. Then we have the 200 at 13,365. I definitely think this wave 2 has that power. And that's just going to confirm to these traders. It's like, yeah, the Fed, they're going to save us. The Fed, we're bullish. We're bullish. That support held. We're going. I feel that when you have to cheerlead and root for your trade and root for the market, it's because you don't understand what the market is doing. And that's what you'd like it to do because you're positioned to the long side. I'd rather just cheer for me as a trader. I'd rather just cheer. I'm going to participate no matter what this thing does. I'm going to go with it. If it wants to move down, I'm going to go with it. If it wants to move up, what my count tells me is, okay, the characteristics of a wave 2, this is where I'm looking for. Where are those larger moves going to come in to the upside right now? Does it mean the trend has changed? Absolutely not. Trend has not changed. Trend is still down. Again, 3 waves up, 5 waves down. 3 waves up, I'm looking for 5 waves down. Now, way on the outside of all of this. I'm going to go back to that daily chart. Just because I have to, because I would be highly remiss if I didn't, we cannot move beyond our current count without including a quick look at one of the alternate views, which you've heard me speak about, that this is an intermediate wave A, intermediate wave B, and we're into intermediate wave C. And that would, many would say, that's complete. It's all done. 12,709, it's all done. We're now racing up now. Again, put the whole corrective process into your purview and understand that 6 months of decline does not clear the path for the NASDAQ to go up and make new all-time highs. Not in my view. In fact, I would not, truly not expect this particular move to just keep going. I don't. First of all, it's a sub-minute level. So it's going to have to break above the top of minute 2, and that's at 13,544. Then it's going to have to break above this. Actually break back by 14,000. Then it's going to have to break above 15,000. How much is it going to take to get there? What is the picture in the world system and the economies have to look like for this market to go to 15,000? This is what I got to, you've got to consider it. You can't just think, well, that's where we're going. Why? Why? The market is a reflection on its component companies, this index, its component companies, the economy, interest rates, everything. It's how we're operating as the United States. How does our economy look? How's our banking system? How are the financial systems? How is personal income? How is personal debt? What does that all look like? Is it still presenting a bullish picture? Is money easy to come by these days? Not according to what they're just doing right now. They just decided to turn around and go, as I'm talking, somebody was listening. I went, oh, you know what? You got a point, Michael. And they just dropped it. And if you're trading on like a 1 minute chart, like I do, they just dropped it $15, $16, $17, all within a minute. So the sellers are out there. The reality is out there. And we're looking for a small, either fourth wave and then a fifth wave up to complete wave A, or wave A is complete at the closing highs. And now we're going to do a B wave, which I think we can get back to the 20 and the 8, which currently are at 12,937 to 12,935. And this, it has to do without anything else in the world throwing a wrench into the whole process. Right? Just saying. So there's still a lot out there that the markets can't ignore. So I can look at it technically, which I do. And that helps me with my entries and my exits. That helps me stay in line and trade with. Against what I think the market should be doing, I still am going to trade with the market. But when we're done and I can take to step back, when I have to really make a determination in my mind, and again, for publication, do I really think there's enough out there to switch this count from bearish to bullish? And that answer remains no. So for tomorrow, we're not done going up. I shouldn't say it like that. We've now seen it up, die, up and up, die, up, maybe die. 1, 2, 3. Okay, bingo. Here. The continuation of the market kicking butt from these rallies is what continues to amaze me. Sellers are still out there. And when you get somebody big who's like, hey, I need to sell X, ba-boom, down it goes. Where are the buyers? If you're so convinced the market's going to go up, shouldn't you be here to support it? Or is it a one-off deal? I don't know. These are the questions that I ask myself after. So again, for tomorrow, I don't think the upside's complete. I don't think the minute, sub-minute wave 2 is done. It may be. And if it is, here's your downside. Break, 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 done. And we're going to break below 12,007. What was that? 09? Yeah, 710. 12,710. That's what the market would need to break below. But first, we got to break below the 4, break below the 20, break below the 8, break below the support level, and break below that price level, break below that price level, break below that price level. Now, it can, we've witnessed it, part of today. So all of these are up there as possibilities. That's what you look for if it's going down. It should not pause. It should not take a breath. It needs to just go. Again, we remain in the same position within this larger count. When we're confronting a third wave, when the third wave kicks in now, particularly if it's done with even a minute 1 and hopefully a minute 2 soon, that minute 3's carries the same message as the minute third did, as the minor third did. Pick up some velocity, pick up some volatility, pick up some speed and push, and they will hit bids. Now, we continue to be in the section where hitting the bids doesn't stop because there'll be way more people that want out, that want to come back in. So again, a lot going on. What gets in the way? Well, we give HFTs the opportunity to come on with their algorithms, and they're just working, they're just doing their thing. And we give them what they want. And they're a part of the market. Believe me, they bring in it. Most of the volume in the options these days is HFT. Without it, we die. We have nothing to do. HFTs put in volume into the futures market. Without them, what do we got to do? Nothing. So I'm glad they exist. I'm glad they're there. I may not always agree with the result, but I love the fact that I can trade, and I can trade easily, and there's volume across the board. And this is where I'm going to leave it. So for tomorrow, I don't think that this small wave 2 is complete. I think we have room to go all the way up to that 200-day or the 200 moving average on the hourly chart, which sits at 13,365. That's another 300 points from here. They turned it around and brought it up 300 off of those lows. They certainly can move it again another 300 tomorrow. If not, we have resistance at 13,128, 13,226, 13,300, and then 365. This is where I'm going to leave it. And our next update will be on Tuesday, May 3rd. The Fed meeting begins tomorrow. The results will be out on Wednesday. Have a great trading day tomorrow.